Hi, Angela. This is Cheryl.
Hi, Miss Cheryl. Welcome.
Angela Woods.
All right, Miss Woods. Who else do we have?
Rufus and Roxanne Watkins.
All right, Mr. Rufus and Roxanne. All right, welcome. Who else do we have? All right, guys, this call isn't going to be long at all. It's just to make sure that everybody can maximize the tools that we have. And this is the Harmonic Scanner. If anybody's having any trouble with the Harmonic Scanner, guess what? I want you guys to unmute in the short time that we're going to be on here tonight and make sure that you get your questions answered so that we can move forward and you guys can, swiftly learn how to actually maximize the Harmonic Scanner, which is the flagship product. So does everybody know how to use the Harmonic Scanner? Put a 111 in the chat. All right, I see someone in the chat now. 111. Thank you for the 111s. Awesome, awesome. Awesome. All right. So this is actually is a little short training on it, how to actually maximize and use the Harmonic Scanner. The trainings that we have, orientation that we have is going to be on next week at 12 noon. But if you can't do that, or if, we have some other pop-ups that are available as well. And then, of course, you have the access to go live. And Manny Quiones is really good on the Harmonic Scanner. All right, so everyone, welcome. Again, this is the Harmonic Scanner. Just a little short training on this, and then we'll move forward. So I want someone on the line to tell me what are we looking at here when we're seeing the Harmonic Scanner. Go ahead and unmute yourself.
A cell.
Yes, we are. And how do we know that?
Because the D is high.
Yes, ma'am. Does everybody see that, what Ms. Woods is talking about?
Yes, ma'am.
All right, so anytime the D is high on top of the Harmonic Scanner, we're looking for it to go in a sell position. Okay. Another way to actually make sure that you can confirm that that's what's happening on the chart is you can look to the right and you're going to see the take profit 1, take profit 2, and take profit 3. So if we're looking at the D being high, me personally, I like to stick with take profit 1s just because it's more likely that it'll get to that level, which is the quickest point. The take profit 2, take profit 3. It possibly can get to that point, but guess what? It can also reverse before getting there. So to comfortably get into a trade, I say take profit 1 all the way. All right, the next thing that you can do on this chart is actually, of course, make sure that you're on the right chart. So it's like they have different types of brokers, which drops down on this menu right here. So you got your FX choice, you have the GBE, Hot Forex, Hugo's Way, JFX, Trader's Way, XM.com, Ganna Trader. And it doesn't matter which actual broker that you have. You can actually use any one of these, and the pairs that actually populate up. So as you can see right here, GBP AUD, CAD JPY, GBP CAD, GBP NZD. The ones closer to the top are the ones that are probably the ones that you can actually work through. What I mean by that is if you see a chart that's already hit all the take profits, that means that you won't be able to use that chart. Now, as you continue to get more skilled, you'll be able to transfer whatever pair it is from Harmonic Scanner onto the trading view. So you can take notes. If you're taking notes, write down www.tradingview.com. So basically, Harmonic Scanner is going to be your training wheels to trade, and then Trading View is basically you taking those training wheels off and you're actually kind of like freestyling your chart. So you find the pair on your own, you find where you're going to enter, you find where your take profits are going to be, and you also put your stop loss on the chart all by yourself. Does everybody get that so far?
Yes.
All right, awesome. Okay, so let me just type in the chat what I was talking about, tradingview.com. And you just set up a free account. And you also have training on how to use the tradingview.com site. You have that actually on your basic videos. Okay, there we go. All right, so moving right along. Let's look at this other one right here. Okay, who can tell me what this chart is doing?
Buy.
Yes. How do we know it's a buy?
Because the D is low.
Absolutely. So when the D is low, we're looking for it to go in a buying direction. And another way to confirm it is because you have your take profit 1, take profit 2, take profit 3 on the right hand side, and they are going up in an upward direction. And the other way around, of course, if D was high, then we will be looking at the downward direction. So how do you know if it's a market execution or a pending order? Anytime it's past the entry line, which is a thin green line, you're looking for market execution. Does everyone see the thin green line?
Yes.
Okay, awesome. All right, so another thing that you can do to actually maximize this chart, the harmonic scanner is 87% accurate, but you can always add on indicators. So the indicator that I like is called the Ichimoku Cloud. On the Ichimoku Cloud, you're going to notice that you can actually kind of tap this button, tap the area 2 times for the Ichimoku Cloud. Then you're going to hit the X. And then what do you see right here? You see a cloud. So this red shading, this green shading all together, that equates to a cloud. So that's the Ichimoku Cloud. And basically, what is it telling you? So if you're looking at D, you automatically know I'm looking at the level D being low. So that means that I'm looking for a buy. So that's the first thing that you need to figure out. Secondly, what we're looking at is our take profits being on the right-hand side. And I have a clear shot to take profit 1 without any interference. Can everybody see that? Unmute yourself.
Yes.
Okay. So I have a clear shot to take profit 1. I also have a clear shot to take profit 2 right here. So if we're going up, clear shot to take profit 2. But remember, I said take profit 1 is going to be most likely to be an area that is actually going to hit. So we're still waiting for that to go on up. And of course, the market has closed 5 p.m. on Friday. So we'll have to wait to Sunday. But as that candlestick goes on up, we're looking at it possibly hitting this take profit 1 area. Okay. All right, let's find another pair. Okay, so what is this chart doing? I needed some new students to unmute.
The D is low, so you're buying.
Right. So D is low. That means that we're buying. And this trend line that I just put on here, it also shows you that's a confirmation that you can add to your chart to make sure that you know that you're going in an upward direction. So that trend is going up. Another indication that the market is moving up is because this cloud is right here. And because the cloud is right here, it actually tells you that it's overall a buying direction or a buying chart. But based upon looking at it from the level D or the letter D, we're seeing that we got a clear shot to take profit 1. So basically that cloud also serves on this chart as like a blocker. So let's say, for instance, something's in the middle of the road. You can get to take profit 1 without any interference. To try to go past that, you're going to have some interferences. You're going to have to swerve and do all that other kind of stuff. So the safest place on the chart, on the harmonic scanner, is take profit 1. Does everybody see that?
Yeah.
Yeah.
As a new trader. Awesome. And what you do is actually use this harmonic scanner hand in hand with your compound growth chart. And did everybody does everybody know what their compound growth chart is to follow along? Oh yeah, Miss Ruth, I'm using default. This is another way to actually use it. So I know some people, some of the older students, they know that they can change the numbers for Dr. Kathy Kirkland's ECC 11. This way right here was actually created by Chairman Jazz Williams, and he has a simplistic way because his team and him being basically a guy, he's like, I need something simplistic that's not, you know, hard to duplicate. And so for the new person that's coming on, you don't even have to worry about changing the Ichimoku numbers. You're just going to just focus on just putting it on your chart, and that gives you, you know, basically an indicator where you can actually see how far you can go up on either a buy or sell. So it's all about being consistent when you're trading. So of course, if you have your compound growth chart, let me see if I can find mine right here. Okay. So pretty much whatever your balance is, and just to under leverage yourself. I mean, if you're putting in $1,000, you can always put in any number in this area. So let's say you have $1,000, but you can just put $500 that you have in there, and you want to grow that $500 to 10% a day. And so basically, once you take, let's say you're doing 5 trades, so the green area is how many trades you're going to be doing, and it's your daily profit. So let's say, for instance, they call out a trade, let's say in Pip Talk, they call out one on the Go Live session. They call out, you know, a few of them on, let's say, Harmonic Scanner. Once it adds up to 5 trades for the day, then you're done. You're not sitting here trading all day long. You pick a session. You're going to pick a London session. You're going to pick a New York session, Tokyo session, or Australian session, and then you're going to stick to the plan. This column right here also factors in your risk. So let's say, for instance, you're losing maybe, let's say, 2% of your account. You can still live to trade another day. So if I have $500, which is really $1,000 in my account, I can bear losing $11 and still live to trade another day. Now right here, it actually says that my lot size can be a 0.10. This chart is totally for the GBP or currency pairs. You don't want to use indices, which is GR 30, US 30. You don't want to use those type of pairs with this chart because it'll be over leveraging your account. The other thing is that, of course, if you're going to do cryptocurrencies and things like that, you would not use this chart either. So this is just for the less volatile pairs, just so everybody knows. And you just follow the plan every single day, like a regimen, like a gym regimen, workout regimen. You're just doing the motion every single day until you get to your goal. This actual chart goes all the way out throughout 3 months. So let's look at day or trade number 25. We're looking at trade number 25. That'd be that $500 would be grown to $5,400. $5,400 at 10% growth a day. We're looking at that particular day being a $492 day for us. And of course, our lot size is moving accordingly as our account grows. So now we're just going to continue on. Trade day number 45, we're looking at $36,000 off of $500. 10% growth a day. That particular day, I took 5 trades, and I'm looking at $3,300. Possible risk $728. I can risk that at that amount. And each one of the trades that you take for the day, 6.63 for your lot size. So you have to be mindful of that. Now, is everything going to go 100%? No, it's not. But let's say, for instance, you're consistent. And let's say, for instance, you get half of that right. Would you be happy if your account was sitting like $75,000 at the end of 3 months from $500? $25,000 at the end of 3 months? I know I would. Month of January for us, 33,000. All right. Anybody have any questions?
Angela. Now, if you're trying to grow it 10% a day, how do you know it's 10%? I mean,
How do you know it's 10%?
yes, like you do. Okay, if you got $500 and you want to grow it 10% a day, how do you come up with the 10%?
You see where it says daily growth?
Yes.
10%. So you
I mean, how?
huh?
Maybe I'm asking it wrong. I know what I want to say, but I can't really put it into words.
Because you can change this amount. I mean, if you want to under leverage yourself, you can do 3% a day. Oops. That took it as 300%. We're not doing that much.
That would be nice.
Whoa, man.
What you're trading is equivalent to 10%.
Okay, here we go. So 3%. So yeah, so based upon the chart, all you're simply doing, so I'm just gonna say like this, plug and play and let the chart do the work. So you know the amount that you're putting in as your deposit amount. Let's say for instance, if you're putting in 1,000, you can under leverage yourself, like I said, by putting half of that into this chart right here. So you're not even trading off a full 1,000, yet you have that cushion in your account. You get me?
Yeah, I understand now.
Okay, awesome.
Angela, I got one question.
Uh-huh.
I just noticed it the first time that I looked at this chart. It's telling you what your lot size is per trade. And I can see that lot size increases as you earn.
Right, and that's where that compounding happens.
Because it's telling you what lot size to trade.
Absolutely.
Because I think the top one is that 0.30? What is that? What is, I can't see it. Oh, that's 0.10. 0. What is the top one, Angela?
This one is 0.10. So,
oh, is it? I can't see it.
Yeah, that's the biggest I can get it. This is actually, yeah, that's large as I can get it.
That's $1. That's $1 per trade lot size, right?
Right. You're absolutely right. So it looks like 10 cents, but it's actually $1 per move in the market.
Right, right. So I can see that increases every day as you trade, because your lot size is the amount of money that you're trading increases as you go up, as you go down.
Right. Absolutely. That's true. Yeah. So you can put any amount in here, and this actual chart will actually, it will transform to whatever number you put in there. So you can change the balance amount. You can change your daily growth amount. All right. So now, you guys think you got the hang of the harmonic scanner?
I have one question. I'm so sorry.
No problem.
How do you know in terms of the indices which one is too much, let's say for your $500 balance or whatever? Well, like you said, US 30, you don't, you got to be careful with that because it's too large, and you can actually blow your account, which according to lot size. How do you know which pairs can take your lot size? I think I'm asking right.
Well, basically, I don't think they have a chart or anything, but I think there are some charts going around. I think we put some inside of the Telegram group, but we used to put in there, you could start an account like with indices or either the cryptocurrencies, because they're more volatile. You used to could start an account with $500. That was the basis of those types of accounts. And you would start with a 0.01, because that 0.01 does a lot for that particular, and because it's volatile, you want to make sure that you're not going so big so fast. The other part is now, like if you're doing Tokyo, China, of course, they're talking about having at least a $2,000 account just because of where the markets are right now. So in general, there's different, because there's no, real right or wrong, like amount that you can actually do. But I will say, because it's like, let's say for instance, the person had $150. Technically with the US 30, that's the lowest of the lowest that you can actually go with the US 30, or those type of volatile pairs. But the thing is, like I said, because of the conditions of the market and stuff right now, you wouldn't want to start an account with $150 trying to do Tokyo, China, or any of those volatile ones. You want to at least stick with the $1,000, $2,000 mark. Other people have had great testimonials, and that was before the coronavirus and things like that. So you really want to play it safe. And everybody, even if you do have a larger amount in your account, you should always start with 0.01 and at least practice where you have 100 good trades inside of your demo account before you actually move from the demo to your live account.
Thank you.
So right now, and actually Tokyo is saying that for every 1,000, like let's say for instance, what she said last time, it was like every 1,000 be 0.01. So 0.01, once you get to 2,000, 0.02. Once you get to 3,000, 0.03. And then once you get to 4,000, 0.04. So you're really under leveraging yourself, but you're making sure that you safeguard your account. Does that make sense?
Yes, thank you so much.
You're welcome. All right, so we're gonna go ahead and quickly go into the Vibrata. I know some people had some questions about it as well. So everybody feel comfortable here before we go over there. Go ahead and put some ones, twos, or something in the chat. All right, thank you for the ones. All right, so now we're about to go to the Vibrata, and I'm actually going to use the old look because the old look is just a lot better for me. Let's see. Okay, so this is the old look right here. And I'm gonna scroll on down. And then you're gonna select a strategy template. My strategy template just happens to be ECC 11, but there's so many more that you can actually pick and choose from. And then you will hit save settings. And then we're gonna select where it says trade. And so when you're on the Vibrata, it makes these little chime noises, which is great because if you have your computer screen up, then you can hear the alerts, and then you can run to your computer and be like, hey, all right, there's a sale going on AUD USD, or there's a buy going on EUR AUD. Cha-ching. All right, so of course the market is now closed, but we're able to see that she has a cloud up here, which is the Ichimoku Cloud. Same cloud that I was using on top of the Harmonic scanner, same indicator. And then basically she has a set amount of numbers that she actually puts on her trade, because right now it's on the default. Let me see here, get this right. Okay, and then what else? There is the colors got to be right. The conversion line is supposed to be red, and baseline is supposed to be blue. Lagging span can stay the same color, but I want to thicken this line right here up. Let's see. So that's the lagging span. Just thicken that up. Thicken the baseline up, and also gonna thicken. Let me make this a little lighter. Okay, there we go. Oops, that was supposed to be red. Okay, so we have that. And you can take a screenshot of this. So this is how the colors are supposed to look. If you're on the Vibrata, Web Analyzer, that's the old name for it. You're going to have a red conversion line. Thank you, Miss Ruth. You're welcome. All right, so red conversion line. The baseline is going to be blue. Lagging span is going to be green. And I just thicken my lines up so I can see them a little bit better. And then once you have that in there, you're going to save as default and hit OK. And then the other part, if you didn't see that part, 6, 13, 26, and 13 for the inputs. And once you guys have it, just put a 222 in the chat. If you got both of those, the inputs and the style of the colors. All right, thank you, Miss Woods. All right, thank you guys. All right, so moving right along. Now, since we're on, okay, see another person in the chat. Okay, Leilani wants to see the style. Here we go. So this is the inputs. And then this is your style. Conversion line, red, baseline blue, lagging span green. And then you're going to select save as default and then hit OK. All right. Okay, so now once you're on here, let's see if it comes up. Okay, so the first one that we see in this little area on the left-hand side, if it has a green bar, that means that you're looking automatically for a buy. So it's a little bit better than, I'll say, Harmonic Scanner. It gives you a little bit more, but it kind of gets you ready for tradingview.com as well. So if it's green, that means that you're looking for a buy. If that bar is red, we're looking for a sell. So the first one is up here, says potential buy on EUR USD, and that's on a 15-minute chart. And so let's go to 15-minute chart, which is here. It said a potential buy, and that is what we're looking at. So you have your lagging span. That's a good sign, and they call that the money line. So that's another name for it. But if the red line is above the blue line, it's all about the colors on this one, guys. So the red line crosses that blue line in an upward position. We're looking for a buy. And also you can see your cloud. What do you see? It's going in that direction of a buy. You see your RSI line at the bottom, and it's also going in the direction of a buy. Now here, I'm going to put from this sidebar over here, I'm going to put on here a horizontal line, and everything that I'm doing right now is coming from this box. So the box is giving me all the information I need to actually put here. So here we are, putting that line right here. And I thickened it up so you guys can see where I'm at. But all I'm going to do is just change the settings on the little gear wheel. And where it says coordinates, I'm taking the information from that left hand side on that box. And it says in there, it says call that price 1.08162. So that's all I'm doing is putting that number inside of that box and then hitting OK. So this tells me where it was exactly called at that level right here. I could have went in on the buy. But since I'm right here and it's still going in the direction of the buy, of course, you can do a few other things like check your different time frames. You have your 1 minute chart, and we're still above. Yeah, we're still above the cloud. Red line is still crossed above the blue line. The lagging span is going backwards. As you can see that the market is retracing, or there's a pullback happening right now with all these red candles. We need our green or our blue candles to come back up. So it's telling us that we're going to have a little pullback. So if you jump in there, you're going to see a lot of red on your MetaTrader 4. Okay, now let's jump on the 1 hour time frame. 1 hour time frame, our red is still above the blue line. That's 3 confirmations there, guys. 3 confirmations that I can jump and execute this trade. For how many pips I want? Dr. Kathy says about 10 pips. 10 pips, that's all the pips that you need. If you want to take more, that means that you would have to analyze the market a little bit more. Let's say even go to the day chart. The day chart is flipped on you, and now we got red line crossing underneath the blue line. And so overall, it's saying that it's a sell. So you have to be mindful of your confirmations. But I got one on the 1 minute chart. My other confirmation came from my 15-minute chart. And then my third confirmation came from my 1 hour chart. And then I go in here, I'm not going to be greedy in the market. So I'm going to take my measuring tool, because you can calculate pips in your head or you can calculate pips on a piece of paper. For me, I'm all about using my technology. So I just go to the sidebar over here and I just place it where I want or where current price is, and then just drag it up. That's the simplest way for me. Drag it on up. So of course, you know, you got to pay your broker. So just go a little bit above the 10 pips that you need. So let's say we stopped at 12 pips. Now what I'm going to do is I'm going to take a horizontal line and I'm going to drop that horizontal line right about here. And I'm going to wait for the market to go back up. And so inside of my MetaTrader 4, I find the pair EUR USD. EUR USD. Once I found it, we're going in on a market execution. That means you're jumping into the market at the time that this order was called. And so basically, pretty much, I'm not typing in an entry where I put the first pink line, not typing that in. All I'm typing in is my take profit. Me personally, I don't like using stop losses because I've been stopped off a lot of times. I just go in for my TP and make sure that my account balance is not, you know, over leveraged. So let's say, for instance, you're using a 0.01. For me, I'm waiting for it to get to this point. Once it hits that point, then I've made profit. If in fact you want to use a stop loss, you can draw the line back the other way with the measuring tool. So basically you would go wherever the current price is at that time and go back about, let's say, 20 pips. So about right there. And then you're going to take that horizontal line, and this line right here is represented as your stop loss. So remember, we're looking for a buy. So we're going up for our take profit. We're going down for our stop loss. Up for take profit, down for stop loss. Up for take profit, down for stop loss. If I'm looking for a sell, it's the opposite way around. Stop loss is above, take profit below. Sell, stop loss above, take profit is below. Is this making sense, everyone? Any questions so far?
How many pips did you calculate this to be?
10 pips, but I went a little bit over, so that's 12. Because remember, you have to pay your broker as well. So you just want to go a little bit over.
Now, it seems, and I'm new to this, so forgive me. You have 10 pips, but you have your stop loss at 20 pips. It seems like the risk is much greater than the reward.
Right. But it's more likely when you're using this harmonic scanner, when you're using the Vibrata, if you've been on Dr. Kathy, and that's why it's good to follow the educator, you know what they've done before. And so basically following her, that's mostly what she's doing, is just getting 10 pips. Or once you begin to get into profit, you see it at a good level, you can go ahead and close out and profit at any time. So I've been following her for a while, so I know that she does this. And really, she really doesn't even give a stop loss on her trades. I'm just showing the new people how to actually, you know, put a stop loss on their charts.
Okay.
Mm-hmm.
Thank you.
You're welcome. All right. Any other questions, guys?
Angela,
Yes.
Could you pull up the US 30? And I want to know how you calculate the pips on the 30, the US 30.
US 30?
Yes.
US 30 for everybody that's new. This is an indice. So definitely we're not using this on that chart that I showed you earlier. All right, so this is the US 30 indice. And we're seeing right now that our red line is above the blue. So that's giving us a good indication that we're looking for an uptrend, a buy direction. That's on the 4-hour chart. Now we're still above on the 15-minute chart. We do have a little bit of retracement happening. And let's look at the 1-minute chart. So we're in the cloud on that. Anytime a pair is or candles are inside of the cloud, you do not trade. So you'll wait till that actually comes outside of that cloud and goes in that uptrend direction, and then you'll take it, because as you can see, a lot of consolidation is going on right here. There's not a clear defined up or down trend in the 1-minute time frame. But if you're actually calculating, let's look at the 15-minute chart. And so what we're looking at right here is basically taking this tool, the measuring tool, and all you're simply doing is the same thing. So I wouldn't take it while it's in this much drawdown. But the thing is, because I mean, this particular pair is very volatile. So I will wait till it at least started showing me some more blue or green candles in that uptrend direction before I jump into it. All right, so when it goes up, let's say for instance, we're doing, well, I'll probably have to move the chart so I can show you a little bit more. Hold on. Yeah, these are going to be calculated different. Gold is going to be calculated different. Again, I'm not the type of person that calculates on paper or calculates in my head. So all I'm doing is using the tool. This is the way that it makes sense for me. All right, so I'm dragging it from the point where the price is currently at, and I'm dragging it up. So when Tokyo or anybody says, hey, I'm catching 300 pips, that's how you read this this vibrata or this this line right here. So basically we have 297, so that's 297 pips. Now on the right hand side, you're looking at, you know, what looks like 2,000, so 2,900. All you're doing is simply taking that last number off. Does that make sense?
Yes.
Okay.
So that's okay. That like it's 20. What's that? 29.2979.
Well, it says 297.9, but you look on the right hand side and it has the 4-digit number. You just pick up the last number.
Okay, so that tell you how much pips it is.
Right.
So that's 297. Okay. Okay.
And then the same thing in the other opposite direction. So all you're doing is putting it on the chart, and then if you carry it back the opposite direction, you're looking at, that's 300 pips back in the other direction.
Gotcha. Thank you.
You're welcome. Any other questions? Yep. So this is why it's definitely imperative that you guys get inside of Go Live, start using the tools, just practicing a lot in your demo, just so that you can get your feet wet on the tools. It's like I said, the harmonic scanner is going to be the simplest place to start because it gives you the answers. And so again, wow, that transition with my eyes. Oh goodness. Yikes. All right, so here we go. We're on the chart for harmonic scanner, and we see GBP CAD on a 15-minute chart. And so all you're looking for is, again, the level of the D. So if it's D that's high, that means that we're looking for a sell. If it's a low D, that means that we're looking for a buy. And then on the right-hand side, that confirms your direction by your take profits. So take profit 1, take profit 2, take profit 3. And if you're already, like, let's say for instance, your candles are past those thin green lines for the entry, that means that you can enter on a market execution. And if it's before those green lines, of course, that would be a pending order. And those videos for the basic video, they break down market execution and pending orders and buy stop, buy limits, sell stop and sell limits. They'll break down all of that for you. So this is how you can get started, you know, from information and education to implementation. So basically you study a little bit, let's say 10 to 15 minutes, 10 to 45 minutes or so on the education, and then you implement by going to your MetaTrader 4. Does everybody feel comfortable to do that?
Yes, thank you.
Yes, you're welcome. Because you don't want to get stuck with all those videos, because we have videos that talk about trend lines, videos that talk about Gartley patterns and, you know, shark patterns, and talk about, you know, a double bottom and double tops and all that kind of stuff. And you can get so much full of information that you never actually get started.
You are so right. I've watched 3 today.
Yeah, it can get look, I've binge watched. When I first got in, I was so excited. I just went crazy watching them. And did I retain the information? No, I did not. It wasn't until I actually implemented the information that I had learned.
Thank you. Thank you. Thank you.
You're welcome. All right, so we're going to go ahead and wrap it up. If nobody has any more questions, until next time. But the next call that we have on tonight, make sure it's at 8 p.m. 8 p.m. Eastern Standard Time. Make sure that you have your guests on there. Make sure that they can see what you guys are seeing. We're people that are actually trading. We're people that are actually, you know, learning this skill set, because this is what we all came here for, to learn the skill set, so that your family can be, you know, saved for nations and generations to come and to come and to come. I'm telling you, because once you learn the skill set, there's no stopping us. Once you learn the skill set, there's no stopping us. So 8 p.m. call, guess what? Get your 3 people on there, get your 5 people on there. You're not going to be the educator. Look, I'm not the educator. I'm just a student that learned. So look, Christopher Terry is paying 150 plus educators. They're inside of your Go Live. Make sure that whatever your schedule is, you find time to actually dig into those, so that if you are the analytical person, you want to know what the X means on the chart. You want to know what the A means, the B and the C means. You learn that from Manny Quiones. You learn that from Christopher Derrick. You learn that from Abel Melendez. You learn that from Chance and Samantha. You learn, you know, the US 30 even more from Kim Torres. So I can roll these people off my tongue, because I'm just like, I study these guys. And so you're not going to know what style of trader that you can match up with until you get into that information. All right. So 8 p.m. guys, let's go, let's go, let's go. All right. Until next time, have a good evening.